What if the gold market conspiracy that's got everyone talking about actually just was a HR problem? Well, that's the fascinating perspective Nick Hubble brings to the table today with what he calls Hubble's razor. Never attribute to his conspiracy what can be explained by incompetence. Well, especially when it comes to the Bank of England. So while social media is ablaze with these kinds of theories about missing gold and market manipulation, Nick's been busy digging beneath the headlines to try and explain what's really happening with those price gaps between London and New York and why getting gold out of the Bank of England's vaults has suddenly become so difficult. So, Nick, welcome, mate. Thanks for carving out a bit of time on your Friday afternoon to talk.
That's right. Huge
Hope you're
pleasure. And
well.
just to be clear, Woody, I'm not accusing our Fat Tail Investment Researchers HR team of anything. This is a general HR issue across the gold world.
Well, I hope you're not, because our HR is our cameraman's mother. So anyway, enough about that. We'll cut right to it. You've made this interesting distinction between legitimate gold market conspiracies that have been proven true in the past and what's happening now. Can you walk us through what's actually creating these delays at the Bank of England and why it's not necessarily the smoking gun that some people claim it to be?
Where do you want me to start there, Woody? Because what's caused this is a sudden surge in demand for gold. But what's also caused it is there's logistical issues that I'm, jokingly or half jokingly referring to as HR issues inside the Bank of England. And the whole point is that you've got this combination of the two, which is quite rare, happening at the same time. And that's why it's just so much fruit for conspiracy theorists and alarmists to pick here, when really there's just rational explanations.
Well, you explain. Well, you explain how arbitrageurs, is that how you pronounce it, are trying to profit from the New York London price gap that have sort of overwhelmed the system. Why don't you explain to me like I'm a dummy? Why don't you break down how this arbitrage works to start with and why it hasn't closed the gap as economic theory would suggest?
Yeah, so the spread or the difference between the New York gold price and the London gold price started to increase. So the two prices started to diverge over time on concerns that Trump's tariffs would apply to gold. So we see this in Japan all the time. In Japan, VAT, whatever they call it there, I've forgotten, their sales tax, their GST, applies to gold. So if you bring gold into Japan, you can get, I think it's a 10% higher price in Japan. And not that I've done that, by the way. It's illegal to do it because there's all this gold smuggling going on and people, trying to profit from this 10% difference. And there's people smuggling gold in all sorts of strange ways. A similar phenomenon is happening between London and New York. They were worried that this same divergence in the gold price that's normal in Japan would occur between London and New York. And this sort of wakes up the arbitrage opportunity where gold traders at banks that have access to both markets are able to sell gold at a high price in New York, the height being attributable to the concern about a tariff, and to buy it in London where it's still cheap, where the tariff doesn't apply. Now, normally, that act would cause the prices to converge back to the same level again because you're buying cheap and selling expensive. So the price in New York is supposed to come down, the price in London is supposed to come up. But that didn't happen. And one of the issues is that you've got to actually be able to move the gold without having to pay the tariff to New York if you want the arbitrage to close or to threaten to close it. So all of a sudden, vast amounts of gold started needing to be moved from London to New York to ensure that they wouldn't need to pay the tariff at some point in the future.
Yep. Yep.
And this caused an sudden outflow of gold from London vaults, not just the Bank of England's, to the US. And so this caused all sorts of statistics to go sort of a bit bananas because there's not usually this much gold in the vaults in New York. There's not usually such an exodus of gold out of the Bank of England so quickly. And both of those stories sort of lend themselves to conspiracy theories by saying, look, the Bank of England clearly doesn't have the gold that it's promising its customers because it's unable to deliver it as fast as they might want. And in the New York case, the question is, why is there all of a sudden a load of gold sitting there? They must be worried about something going on. And certainly when you're aware of both and combine the two, that the story as a whole makes sense and it sort of exposes just a logistical issue.
Yeah, because the traders that you refer to, they're trading paper gold, aren't they? They're not really don't really
Yeah,
want
this
to
is
take
this
delivery
this
of it.
gets very it's a combination of gold futures, so what you might call paper
Yeah,
gold, of unallocated gold, meaning it's like a bank deposit. If you've got
yeah,
unallocated gold at the bank, it's just like your bank deposit. You don't own that money anymore. The bank owns it. The bank owes you the money. If the
yeah,
bank goes bust, it's not clear what happens. So it's the same with unallocated gold. The bank
mm,
says we'll give you the equivalent to whatever how many ounces of gold worth in money if you demand it out. So and then you've got allocated, which is a specific
that
bar.
is your coins behind you there
Yeah.
over your
So
right
it's
shoulder.
actually it's being stored for you, and you can identify which bar is yours. And that's very
Yeah,
important because there's also some issues here with the fact that the different gold bars weigh slightly different amounts, they're slightly different shapes, they come in different standard sizes, there's differences between the London and the New York standardized expectations of the different trading systems. So the way the conspiracy theories pop up is by confusing people about all these different formats of gold and all the different ways of owning it, right? So you can say they all trade paper futures, but we've just discovered why, because the logistics of physical gold are pretty damn difficult and demanding and expensive. Like flying gold across the Atlantic is not cheap. So there's a reason why the paper market exists and why the unallocated market exists. And if you're saying, the Bank of England doesn't have the gold that it's supposed to, you're sort of assuming that they're supposed to have it in the first place. That's only true of allocated gold. It's not
mm,
necessarily true of unallocated or of futures, right? So by conflating the different ways of owning gold, you're able to create a conspiracy theory that sounds, and in some strict interpretations, is correct. But if you understand how the gold market actually works, it's just there's no there.
yeah. You do mention, I don't know if this is connected. I guess that what you're talking about is the bigger picture of the gold, how the gold market works. But you also sort of zoomed in on the Bank of England and the fact that they use a bookkeeping system that's in itself created logistical challenges. Can you just explain like what makes gold vault management so different from like other commodity storage systems? I mean, look, if you're talking about gold and oil, for example, they're two completely different things, right?
Yeah,
But
and this again, it's a good example of how the details are such a complicated mess that again it lends itself to conspiracy theories. So you might think that when the customer deposits gold, it's sort of in a pile that has their name on it,
yeah,
to simplify things. The issue with the gold market in London, especially at the Bank of England, is that there's so much buying and selling going on at all times that you don't necessarily get the same bar back again,
mm,
right? And they don't move the bars around depending on who owns what. It's just a bookkeeping entry system that says, this person owns these 10 bars. Now, when they first deposit the 10 bars, they might be in a pile together. But after however many years of trading,
mm,
the bars you own are all over the place. They're dotted around all over the place.
mm,
And at least the Bank of England is claiming that they're basically struggling to get the people into the vault to find the right bars in the right places, to collect them all into the one spot, and then to put them on the lorry to get them delivered to the US. There's also an issue of, as I explained earlier, the standardized gold bars in New York and London are different, which means they have to be recast. They have to be melted down and made into New York COMEX standard weights and shapes. And there's not that many refineries around the world that can do that. A lot of them are in Switzerland. So it's not just a case of moving your gold from London to New York. You've got to go via Switzerland, and you need to find someone who actually does the refining there. And supposedly the refineries in Switzerland are getting absolutely swamped by all of this. The reason I call this a HR story is because, the gold market, the refiners, the vaults, all these different parts of it, they're not full of people sitting there waiting for a moment like this. They hire and have a certain amount of employees. And if demand exceeds the capacity of those employees or their smelters, whatever else it is, then they just can't suddenly ramp up production to meet what's going on. So they're a business. You can imagine hiring like 1,000 interns for the Bank of England vault. It doesn't work, right? Or
yeah.
weightlifters or something. So the issue here is that because of the tariff threat from Trump, the demand spiked. And so they're just not able to process it. There's just too many bottlenecks in the system. And that is not a conspiracy. That's just a case of not having the physical and human capacity to deal with such a sudden flow of so much gold.
Yeah. Yeah, that's interesting. Is the tariff threat as real as people think on gold specifically?
Well,
I know it is in Japan, right? Because they got attacked. Yeah, go on. Explain.
I've no idea. You're asking me about what Trump's going to
Okay.
do next. I have
Yeah,
absolutely
fair
no
enough.
idea. But this is a good lesson in economics, right? The mere probability of this occurring is priced in and is enough to start moving things. And
Yeah.
the point is that, imagine two different arbitrage traders. One of them has bought gold in London and sold in New York, but his gold is in London. He hasn't moved it yet. He can't deliver on to close his profits if the tariffs hit. Whereas someone who's moved his gold already can take profits on an arbitrage because he doesn't have to pay the
Yeah.
tariff.
Yeah. Yeah.
So it's all about getting the gold across before the tariff hits. So it's an anticipation of the tariff rather than the tariff itself hitting. Once the tariff hits, then the price divergence should stick to some extent, and the arbitrage opportunity will be gone.
Final question. Beyond the vault drama, you suggested there might be something more significant driving the gold price, and that's potentially China's buying activity. What evidence have you discovered or read that points to that being the real story about gold that investors should really be watching, as opposed to this kind of smoke and mirrors by the conspiracy stuff about the tariff thing, which has kind of been blown out of proportion? But what do you think?
Yeah, a former editor actually just got in touch a few hours ago with some evidence, which is the gold export figures that basically suggest that the gold flows are occurring exactly the way that I've been suggesting here. The biggest story, though, has been China, Chinese demand, the idea that before all of this was going on with the US and London, the gold market was already, struggling with bottlenecks because of the amount of Chinese buying. And the issue here is that China doesn't necessarily officially report how much gold it's buying in a particularly honest way.
Yeah, and I also, sorry, Nick, added to that, I also know that they don't, I don't know if it's still the case, but I remember doing a lot of research into this back in 2012 with Greg Canavan. It's a little while ago now, obviously. But I know back then they didn't allow any gold from China to be exported. So any gold discovered within China was kept within the borders. So you don't actually know how much they got. Just an
Yeah,
interesting
well, they've got their own gold exchange now, the Shanghai Gold Exchange, and the question is how much they're withdrawing. But the point is that Western governments report their gold purchases, and the Chinese have been buying significantly more than their official statistics suggest. Now, if that's accurate, then probably the demand on gold globally in the market, but including in the London market, is much higher than people were expecting. So it only took a little bit more to cause a sudden increase in these delays and these issues in the market in the UK and in New York, because the refineries were already working hard. They were already at capacity, and then this additional issue popped up.
All right, final question then, Nick. That was my final question, but one final question. Let's just bring it back to it for the Aussie investor on the ground. Is this something to concern themselves with, or is it suggestive of a ongoing bull market in gold? What do investors do?
Yeah, I think it's a sideshow, or a distraction. So the idea of a conspiracy, you might be wanting the conspiracy to be true or whatever it is, so the gold price goes higher. And my point is, it's a sideshow, it's a distraction. There is a real story for why the gold price is rising. This bottleneck issue in the Bank of England gold vaults and in Switzerland at the refineries and in New York and so on and so forth. That's not the real story. Not everything that looks like a conspiracy in the gold market is one. There are real ones. People have been arrested, things have been proven, but this just isn't one of them. That's Hubble's razor. Don't attribute to conspiracies what can be explained by incompetence or by human resources. There's better explanations for what's going on, such as the China story.
I was going to say, Nick, I do have one final thing. You just did a really fascinating. You just did a fascinating interview with, who was it? Jan
Jan Noonhoos.
with
Good luck spelling his surname.
Yeah, yeah. That was a really fascinating thing. That's with the our sister company in London called South Bank Investment Research. It's under the Agora network too. I know a lot of our audience comes from the UK, so you should definitely check out your video that you've done with Jan. Maybe we can provide the link in the comments so that people can go and check that out. But we'll also provide a link to a fascinating presentation that our own Greg Canavan has done with our gold guy Brian Chu. So we'll pin that to the top of the comments. Do check that out. But Nick, you ended your video with Jan with a little insight into how you store your gold at home. That little piggy bank behind you, I've already referred to it. How many gold coins do you actually have in there, and where can we find them?
Well, that was
Address.
my nod to the conspiracy theory, right? The idea was it's extremely safe for me to hide all my gold coins in my Bank of England gold bullion piggy bank because, of course, no one will ever think to look in here for gold now that the Bank of England's run out of gold. But yeah, to be clear, there's nothing in there other than a piece
Oh,
of.
right. Damn. Disappointed. All right. Well, thanks for chatting, mate. I hope you enjoy the rest of your weekend. And for those at home, let us know what you think. Check out Nick's video with Jan. Check out our presentation on the gold market between Greg and Brian. All the links are below. Thanks for watching. Cheers, Nick.